Alright, so hit record, so I'll record this and I'll put this up later on. So I want to go through some of the stuff that I went through yesterday, which actually is good to touch on more than once anyway. Because then I want it available for other people to be able to watch it as well that can't be here with us right now in the live room. So welcome, thanks for being here, do appreciate it. Let's have a look at what's going on in the markets. Everybody should have some sort of routine that they go through, when they trade. You want to kind of have a look around and see what's going on. It's so easy to open a chart, see a setup based on a small piece of information. Seeing a setup based on a small piece of information is a bit like approaching a girl at a bar, because from behind it looks like, oh, well, who's that? She's got nice hair, right? And then you get over there and it's a dude. But from behind, you saw the hair. It was a bit what's the word I'm looking for? It was a bit it was deceptive, and that's what it's like when you look at when you just open the chart and it's like bang, oh, I've got a trade, let me just take it. You don't want to do that, so we'll go through what you want to do. Before we do that, let's look at the calendar really quickly. So I take it you guys all know what the time is and how the times have changed, British summertime, etc. So if we look at the calendar, we go to our time to make sure it's the correct time. We want to make sure that we're now selecting GMT +1 for the extra hour. And then calendar, have a look at what's going on. Again, what have we got today in the markets? Another uneventful day as yesterday was. What I always like to do is when I look at the calendar, I also like to have a look and see what else is going on for the week as well. So it's always a good thing to do. I'm just going to mute all of you because I'm just getting some feedback here. Right, so if we look at today's date, we've got CB consumer confidence from the US. We can see how that's going to pan out. It's expected to come in more or less the same, with a little bit better than expected. So we'll see what happens there with the US. At the moment, the dollar's found quite a bit of strength. And then on Wednesday, it's a little bit more active. So in the morning at 1 a.m. we've got some news in coming out of New Zealand. Anybody here that trades a Tokyo session, Tokyo breakout? By the way, if you don't trade a Tokyo breakout, you're missing out on a real trick here, because it's just after 10 p.m. at night, and it's really smooth, works really well, the Tokyo break. I like it a lot, and it's one that you don't. I mean, I don't know what you guys are like waking up in the morning. See, for me, it all depends. It all depends on what's going on in the morning. So yesterday, I was up at 6, but I didn't place any trades. And it was a good day for the London Open, but I didn't place any trades. Why? Because I had to sort my son out. And, he did one of these, I don't want to wake up. Yeah, I'll get up in a minute, Dad. Oh, yeah, oh, I'm hungry. I need something to eat. And then make something to eat. It's like, oh, no, I'm not hungry no more. Oh, can I quickly play my game before we go to school? Do you see what I mean? So I'm dealing with these kind of things in the morning. Sometimes it's not practical for me to be placing trades because I'm too distracted with what's going on, right? That's what it's like when you've got kids. Some of you guys know because you've got kids also. So at 10 p.m. at night, after 10 p.m., when the kids are asleep, as they should be, not always. Again, if you've got kids, you know what it's like. But after 10 p.m. is when it's a good time to place trades on the Tokyo Open, so it's very good to trade Tokyo Open. When you've got news, you've got to be careful when there's news coming out if you're trading New Zealand dollar tonight, because it all depends on the impact of the news, but this isn't typically the most high impactful news anyway. So, USD, when we're trading during the European and the UK sessions and the US sessions that we do, we've got US news coming out at 1:30, which should serve you well for a breakout. It's good when there's some news and you want to do a New York breakout. And then you've got crude oil inventories. Crude oil is back to its normal time now. Do you guys see that? Yeah, back to its normal time of 3:30. So crude oil inventory is always at 3:30, and it's good. These are good for trading the news trading strategy. Even if you want to trade at 1 o'clock in the morning, and you want to do that if you're up, and then you've got some more. You've got some more pairs that you can trade based on the news that's coming out. Thursday, we've got some news coming out at 9:30, so I want to be prepared for that 9:30 in the morning, and that's typically quite good as well. I always find if you've got a breakout coming out or you're looking for any move and there's some news, it helps push it, especially if you're trading supply and demand. That's the best thing to do, always in my opinion. And then scrolling down, as you can see, bank holiday. So bank holiday, New Zealand, Australia, Friday. We've got Switzerland, Europe. Now you see Europe, you've got Germany, then Europe, you've got France. This is going to be the whole of Europe, really, is going to be on holiday. Do you understand me? Especially if Germany and France are not in the markets, forget the Eurozone. The Euro isn't going to move with the back of the other currencies. It's Germany and France are the strongest economies, Germany being the most prominent one, yeah? So, Friday, don't trade Friday. You can trade if you want, but Friday's a bank holiday, Easter, enjoy it. It's Good Friday, then you've got the Monday, which is bank holiday also. So, we've got some low liquidity, if you like, times where there'll be low liquidity in the market due to the bank holidays. Okay, cool. So come back today. It's very uneventful till 3 o'clock. We've got something going on. Bloomberg, it's good. Do you guys check Bloomberg? It's always good to have a look at Bloomberg just to see what's going on sometimes. If there's anything. But remember something I want to say to you guys about the news as well. Something important to understand before we do look at the charts. With the news, when you know, sometimes news comes out, yeah, and it's breaking news, yeah. Really, you can't really trade off that news, because if you do, you're being reactive to the markets. You don't be reactive to the markets. You don't want a piece of news to come out and you act upon that. What you want to do is you want to have your viewpoints made already. This is what I would say to you guys. You know, read Kathy Lean. Let's see what they're saying. So you can see here, end of month flows, target table, cable. We'll look at cable. Cable's been falling off quite heavily. We looked at that yesterday as well. It was a strong uptrend. Some of you guys will remember this from yesterday. Strong uptrend, but we saw that it was making lower highs, consolidating and so forth. So we'll look at that in a minute. At a glance, you can see what you can see that oil is $64 a barrel. Gold is 1,350 an ounce, and so forth. So that's one of the good things about BK Asset Management. You can get this information sort of at a glance, yeah. But it's good to have a look here and see what's going on. Obviously, no data, we know that. So end of month flows with the dominant theme of the day in the early European trade today, as the movement in Euro GBP pushes cable lower by 100 pips in morning London dealing, yeah. And a lot of times, it's the move that you get off London Open will follow through as well. Not always, but a lot of times it does. So if you're going with that kind of mentality, you can catch the biggest move out of it. A lot of people look to close when they've got trades on the table. What they do is when they've got money on the table sitting there, they look to take the money, grab it, and put it in their pocket. But when they've got losses, they tend to hold it. Now, psychologically, mentally, and emotionally, that's just going to mess with you. That's not good for you at all. You know. So if you've got a trade on the table that's winning, let it run. See what it's going to give you back. You know, if you've got a trade that's losing, cut that trade. Cut that trade. It is not good for you. Do you understand me? It's a bit like you're seeing a woman and, you know, she's having it away with your best mate. And there you are sitting in there while this is going on. That's not good for you. You've got to leave that woman, leave that relationship. That's what a bad trade is. But if you've got a woman and she, you know, and I'm not saying this to be sexist, and hopefully people aren't going to see this on YouTube and start commenting like, oh, it's a bit sexist. I'm not saying that. This is analogies, yeah? So, and I know we all get that in this room anyway. If you've got a woman that she looks after you, she's good to you, she cooks, she's clean, she's loyal, she's kind and so forth, you know, you don't look to get rid of her as soon as possible. You don't think to yourself, oh, let me see if I can get one over on her as quick as possible, and then kick her out the door. You don't do that. You want to keep her. Trading's the same way. Yeah? But the reason why I bring up these analogies is because in other parts of life we can behave in the way that we want to. When it comes to trading, sometimes we can't. Yeah. So this is why it's important to do this, because when you do this and you start taking different viewpoints based on information that you yourself has been deciphering, right? And you do that, and then you can speak to other people. You've got a big group here, traders at Bovarius. You've got any one of us here in the office that you can speak to, and you've got the chat group as well. You can speak to other guys around you, you know. So, you know, some of you guys, you know, in a year's time will be sitting together on the trading floor, you know. So, right. So anyway, so pushing on. Very little fresh event risk to move FX, but the risk on rally that pushed prices to near-term swing highs yesterday ran out of gas by afternoon Asian trade, with euro dollar topping out 1.2476 and cable hitting a top of 1.4250. So from then on, the two pair turned lower, although declining cable was much more pronounced, and end of month settlements between UK and EZ exacerbated aspirated the move. Learning to read. um, so the information they're giving you can tell, quite obvious, it's information of something that's already happened, and that's typically what news is. It's already happened. By the time you get the news, it's too late. Yeah, but it can help you if you start reading this every day. It can help you to start decipher certain things and see certain things and so forth and understand, because you understand how economies work. You want to understand how central bank speakers think and so forth and that type of thing. Yeah, and so here you go. Euro was. Boris and Kathy are both good. I prefer Kathy. I think I've told you guys why. But you get a good snapshot here. So the euro dollar nudged lower as well by comments from ECB's Liikanen, who hinted that the taper of a QE in September was not a foregone conclusion and that the Governing Council reserved the right to extend its programme if it saw fit. It is very doubtful ECB will extend QE beyond September, but the comments were made in an attempt to jawbone the pair lower. So remember, this is what central bank speakers do. They will get involved and manipulate their currency by speaking. They don't need to do more printing and stuff. Just by saying they want to start printing more money, that in itself is going to have an impact. Yeah, because that's going to be deciphered by traders and investors and so forth around the world. Banks will create fair value off the back of it. Remember that, yeah? So, which worked, right? So, and you know, if you look back at the history and see how Japan's been doing it for so many years. So it's clear that ECB is uncomfortable. The euro dollar above 1.25 on the nose. Yeah. So at the figure, it's uncomfortable there. Okay. So that's a good heads up. So you guys should note that figure there. In that case, at least for the time being. Remember, these things aren't forever, but for the time being, they are. You should note that. The 125 figure is trying to stem the rise of the unit through rhetoric. The rise in the exchange rate has definitely created some deflationary pressures in the region, especially in Germany. The latest price data showed a year-over-year decline of -7%, which no doubt is creating concerns in Frankfurt. So the North American calendar is barren as well. So FX may take its cues from equity and fixed income markets the rest of the day, but unless other capital markets see large moves, the price action for the rest of the day may be contained. Easter week is seasonally a very slow time in the currency market, so consolidation could be the order of the day. So Easter week, because it's a Christian celebration, and you know the Western world typically is Christian, right? Therefore, that reason you can expect that we're not the only ones celebrating Easter. Everybody's celebrating Easter as well, and so forth. And you know, anyway, so it's not about what Easter really is, but more about how it's perceived. It's a public holiday. People like to take a break. Everybody does, right? So let's with nothing going on. Let's look here and see what's going on with our charts. Can you guys see that? Okay, yeah, perfect. All right, cool. So. Actually, we drew some of these levels in yesterday. Do you guys remember that? Yeah, some of you in the room, you remember that yesterday. But what I was doing yesterday, and I want to do again today, is was just looking at. I want to find a clean chart first of all before we do this. Yeah, so if we do. Euro dollar's repeated, so let's just change euro dollar. Okay, and let's make this clean as well, yeah? So yeah, we've got levels on there. We do, yes we do. But let's clean this up just so we're looking at a plain chart, yeah? And the reason why I do this with you guys, because I want you guys to see how this works, how I do it without any indicators. And then obviously you guys can use the indicators as a guide, but just you don't need anything really. You kind of want a clean chart. So we were looking at this yesterday, and if I just do that, and if I take my drawing tool from up here, yeah, I take it you guys are all familiar with MT4, but remember what you guys can do also, if you're unsure about anything that I'm showing you, then feel free to ask a question in the chat, yeah, even if it's something as simple as how did you draw that trend line kind of thing, yeah. I'm just going to extend this, click on Ray, extends it out. Okay, and now let's come back here, and then we can do this. Let's see, that's gone slightly steeper up there, so we can see right now currently, yeah, that what the trend is doing, yeah. So clearly you can see that on pound dollar the trend is up, right? On the daily time frame the trend is up. We're short-term traders. We don't need to start going to the other time frames so quickly. Um, so we'll start from here. Now, if you guys prefer this, you can see this. It does allow you to see the wicks a bit more clearly. If I do this and I do this and I do this, and then I put shapes in here, and you guys know how I like to do it. So I think we probably took this in live from yesterday. Do you guys remember that at all? Those of you that were in here with me yesterday. I think this trade was placed in the live room yesterday, and I'm sure I discussed the reason why I was taking this trade, even though the markets were pushing higher and so forth. Anyway, I'm going to put my again, you know, the big green, big red are what interests me. I've got a wick here. I'm going to take the wick. It's going to reduce risk massively by doing this. We're on a daily time frame, so let's measure this because we're not taking these trades off the daily anyway. So you got 66 pip range. Now the other one that I'm looking at is here. Do you guys see this? By the way, if you don't, let me know. Patrick, I've got you in the room, so I want to speak to you later at some point today, just to go through what you sent me. Yeah. So you guys should all do this, and some of you have done, where you draw your levels in, yeah, without no indicators, and send them in, so I can see what it is that you're seeing, because then I can start correcting it and so forth. Yeah. So. And obviously it's going to help you guys. It's going to help you. It's going to help you to learn and so forth. Yeah. Anyway, so let's zoom in a bit. Do this so we get a bit more of a clearer picture. Now, what I was going to say, one thing that we were discussing yesterday was how when you've got these big, and sometimes you've got this one red and then the continuation, this can kind of give you a heads up a bit as well. I mean, we didn't draw this in just yet, but if I did this, if I took this wick here and did that, you can see how it lines up. Yeah, you guys can see how that lines up. Right, now get in the habit of doing this, and what will happen is if you get in the habit of doing this, and some of you, I've seen some of you do this, you draw across, so you might come here and see this, and then you might decide, okay, I'm going to draw it across here like this. And the reason why I don't do that is because, to me, and I've heard it be said before, that supply when broken become demand and vice versa, but like they do support resistance. But for me that's gone now, so I don't want to know, I don't want it there. I don't want too much information clogging up my chart. I don't need that much information clogging up my chart. But I do want the ones that can show me what's going to be happening. Now what I could do is take this one here as well. Yeah, because what we've got here, I do have my rally, I do have a base, I do have a rally. Right, so I'm going to draw this in for you. See that? That and that. Yeah, you guys see that, yeah? Perfect. So what we'll do then, we then drop down, yeah, to a lower time frame. We'll then drop down to a lower time frame, yeah? So we'll go down to a 4 hour. And let's have a look and see what's going on in the 4 hour time frame, right? So looking at the 4 hour time frame now, it gets a bit more interesting because now if I do this and I take this one here, bang, where are we? We are right here. We're testing this level here. So for me, it makes sense that we should get a rebound here, right? If we did this, so now I don't know how you guys draw your trend lines, by the way, but I used to draw them so they would only touch on the bottom like this, right? So this bit here, right? So it looked like this. This is how I used to do it many moons ago. That black's not quite black enough, is it? Look at that. It's not quite covering it. Gordon Bennett. Alright, anyway, so it was like this. Now I don't care about that, because why? Because it's not about these perfect patterns and so forth, you know. This isn't a model that you're looking to model your product with. Do you understand me? It doesn't need to be perfect. That's not how it works, right? So for me, this here's a touch. I'm looking where the touches are. So I'm coming in now to touch this here as well, aren't I? Yeah, that's lining up. Do you guys see that's lining up? Yeah, perfect. Okay, so what we'll do then is, again, is still look for where our levels are. So I can now, if I want, I can now take this one here, this base area here. I like this base area. I know the market's left it already, but I would I would be looking to, if this thing follows through as normal. Oops, wrong color. If this thing follows through like this, as it has been doing, I'd expect to come into here to reject this. Do you understand me? Yeah. Is that making sense? You guys see that? Yeah. Perfect. Now we're going to drop down to an hourly time frame. So we're not looking to trade off the higher time frames, but now look, now we've got some confluence. Yeah, does anybody like this at all as a trade? Yes, no? Don't all answer at once. Remember, I can't hear you guys because I've muted you. But okay, excellent. I could hear someone there. Sounds like Patrick. All right, cool. So, and then now I'm going to take this one here. Yeah. You guys see that, yeah? So, what am I looking to do? So, I'm going to make this one a different color, just because this is the one I'd be looking to trade it from. You guys see that, yeah? Now, the problem that I have is that I do have a sell trade on. That I would need to cut that to take this buy trade here. I'm not sure if the move is completely over with just yet, but what we're going to do is see how this works out. So, part of me wants to buy this, but I have to cut this trade here that I'm already running. So let me just see if I've got good enough reason to want to cut this trade and take that long. Actually, do you know what? I'm just going to run this trade and stop here at 2 pips and then see how that works out, and then I'm going to look to take this. I don't think this will drop any lower than that, so we'll see how that pans out. But this thing's been dropping quite a lot, but that's quite a tumble it took. 140 points. I expect to slow down, and then there should be some retracement in there. Let's just do this and have a look. Right, so I'm going to take this trade here to the upside, but this thing needs to really close me out. But I'll let that close me out as and when it does, yeah? So, bang, I've bought pound dollar off of the back of my analysis that I did. You do, yeah? Ah, perfect. Nice. Okay. So Patrick's in. Right, so, and then I don't, if I go any lower, I'm going to 15 minutes. I don't go to the 5 minutes, start looking at things and so forth, but you can, if you want, go lower and lower and lower and start seeing what you're seeing as the market starts to make potentially higher lows. Now, remember, this isn't about being right or wrong at all. Remember what this is about. This is about simply following a process, yeah? So, it's pound dollar. Now, typically, we've got pound yen here, so let's just have a look at pound yen. So, with pound yen, what you'll find is typically it will move with pound dollar. Yeah. So let's clean this up as well. Plain chart here. Give you guys candlesticks. Right. So you can see that again it's an uptrend. But do you see the difference in the moves that it makes? Yeah. Do you see that? Perfect. Do you see the difference in the moves that it makes? Do you guys see that? Yeah. So the difference in the moves that it makes compared to pound dollar. But they do move together. This is the thing. They do move together. You've got 2 daily time frames here, so I'm just going to make. But typically, what you'll find if you see one going up, see the other going up, and so forth. Yeah. But now, what's gone on today that's a bit different? Well, today the yen's been quite strong. Actually, surprisingly enough, and it's been strong against the dollar as well. So that's where, with your confluences, you know, when you have a confluence on these trades, you know, when you flick through and stuff like that, and say, oh, that's dollar Swiss. Let's look at dollar yen, no, dollar CAD. Driven by the dollar, finding strength. You've got dollar CAD here, finding strength, as you can see. Then you come back to dollar Swiss and you see dollar Swiss is finding strength as well. Yeah, that green, you see that? And so forth, yeah? Is that making sense, yeah? Do you remember yesterday, actually, we put this order in yesterday, it didn't trigger. Anybody remember this? Yesterday, we put this order in. What's this here? The 220. Let's move this out of the way, don't need that in the way. I don't know if you guys remember this, but yesterday we was looking at this. And I liked it up here, and it didn't trigger. But the trade, but it's still in place, yeah? So why is it still in place? Because, look, the truth is, I don't need a trigger right away. I've got a level in place of a higher time frame, and to me that's good enough. So I can leave that. There's confluence there on the higher time frame. Now on the lower time frame, and I remember if we did do this yesterday. So if we go to the day time frame, yeah, we look at what the market's doing. Let's get rid of everything and make this plain. Again, let me give you guys back your candlestick patterns here. Alright, coolio. So if we draw, you should always do this. Get in the habit of just doing this. This is just lines. It's nothing special. You can all do this. This is really easy. Just draw them in. Just draw them in, yeah. So from here you've got another one here. Do you guys see that? Alright, and this one has held, yeah. Okay, I like to draw lines to look for where price is doing specific things, like is it consolidating, is it rallying off, looking for a level and so forth, that type of thing. We still look for our levels the same way. Remember, we've got the big drops here, we've got some sideways movement. To me, that is a good level. I like that level, and so on a daily time frame, that makes it even stronger. That to me says that when it triggers this level, we should get a nice move. Had this triggered our level, if I'd have put my order a bit lower and it triggered, I mean the move off of that right now would be up 90 pips. That's 120, 130 pip move. You see that. So, right. So anyway, so we can see that we've got here definition of a trend is we've got lower highs and lower lows. Now this is in your course material that I sent you guys, and you've all got that course material, so you all should all be going for it on more than one occasion, asking questions and that type of thing. Yeah. So we've got this here. Now, if I do this, I can see here that I've also got the market's making, and it is, as you can see, it is making lower highs. This one's higher lows. This one's a bit lower, but it's still pushing up like that, and that uptrend. It's not perfect. It doesn't have to be perfect. Remember that. Don't worry about being perfect. That won't be good for you. Here's another thing. Now I take this and I draw this here, right? What am I seeing here? What do you guys see? Don't all answer at once. You guys can all see that channel. Yeah. It's an uptrend and it's in a channel, consolidating channel going upwards, yeah? You see that, yeah? So, to me, what I'm expecting from this is, and by the way, had I drawn my level in here and place this trade beforehand, I'd have bought this. Now it's too late. That move there is what, 30 odd pips. It's too late to buy it now. But I'd expect that to keep pushing up here like this, to collect this, and then sell off. And that's why I've got this order in place here on a daily time frame, which means that it's a lot stronger. Go to a 4 hour now to have a look, see what the 4 hours doing. We can more clearly see that this thing's in an upwards channel. Yeah, so that would give you a lot of confidence now to start buying this up to this point here. Even though the longer term trend is down, clearly, and if we do this and we put more lines in here and we do this, again we see it going downwards, yeah? We see that, yeah? So let's remove all these. Don't need that. Let's move that as well, don't need that. So let's leave that there for now, okay? So on the daily time frame. Now let's go to 4 hour, 1 hour, yeah? Now on the 1 hour time frame, you have a look at that. Tell me what you guys see. I mean, do you guys see the same thing? Do you guys see the same thing I just saw on the daily time frame here on the hourly? You can't, can you? Right? If on a daily you see that, on the 4 hour you see that, on an hourly you see that. So again, this is like the chick at the bar, but it's really a dude, but you don't know. You think it's a chick because of long hair, and then you know you might say something, and then the dude turns around. It's like, hello. You're like, oh my gosh. You know, you run down the door, whatever it is. So you might not be. Who knows? That's not the point. The point is that you don't see as much information, yeah? So, it's the 1 hour, 30 minutes. Now we go down to the 15 minutes. Now tell me, do you see as much information? Hell no, you can't, right? Same thing. But what you can do now, based on analysis that you got from your higher time frame, is you can start to draw some levels in and have a look. What have we got here? It's remember the same pattern. We've got this rally, and then this drop. I know you can't see a base in here, but if we drop down, you probably see that there will be more candles in there. If I did this to mark that, and then drop down, we could have a look, see what's going on. Where is it? Well, lost it somewhere. Here we go. And go to 1 minute. And scroll back. If I can find it somewhere, wherever it was. Lost it. 26. So it wasn't 26. There we go, 26. Yeah, so did you see that, yeah? Do you guys see that, yeah? That there is your base, isn't it? Yeah. Let's get rid of this. Do that. I'm going to move this across a little bit. Yeah, so you can see the wick. Now, we can see the wick, so we know that actually, as part of our base, it has to be up here. Yeah, it's not massive risk or nothing like that. I mean, you can see here it's only 3.5 pips because on a 1 minute time frame, but we don't trade it for 1 minute. 1 minute's too erratic. So on 15 minutes, I've got a good level coming up here that I like the look of. Is it coincide with what's going on here? Does it? Well, yeah, it's still within this. Remember, for this to go from here all the way to here, that's still quite a move. I mean, you're looking at 100 pips. Do I think it's going to do it today? No. Do you think it's going to do it today? Doubt it somehow. But this one here could quite comfortably come in today and collect my order. So, this one, I like this. So, I've got my order here, and this one's sitting there at 0 spot 94851. 0 spot 94851. Which means that my risk on this here can be very small. Yeah. So, let's measure this. At 10 pips, I can have it above this wick here. How comfortable is that? That's comfortable enough to find out how wrong you are if you're wrong. So you put a stop loss in place, and I might want, say, 95, 10 pips above, and now I just drag it above here. That's 11 pips. How many is that? 12, 12 and a half. That's comfortable to leave that 12 and a half. If this thing hits here and comes down, am I going to get a 2 to 1 at least for it to come back to here? Yeah, of course I am. Now, is there confluence here again? Is there some kind of confluence, yeah? There should be some kind of confluence. Well, what do you guys see if I do this? What's going on here? Anybody? Don't say some dude is drawing circles on the chart. Yeah, exactly, Patrick. It's downtrend, right? You can see that clearly. It's downtrend, yeah? Market's coming down. You guys can see that, yeah? So, is there confluence here? Does this line up with my trade? Yes or no? Does that line up with my trade here and come down? Does it? Yes or no? Exactly, right? So that's why I'd like to have that trade in place. So this is so you guys can start seeing how to look at the markets, and you know, the more you do this, the easier it becomes actually, and it becomes easier and easier and easier and easier and easier. I think we've got to do something about pound dollar at the moment. Sorry guys, bear with me because we put that trade on earlier. and we've done nothing about 13 points. Things up 3 points. I just want to, there you go, 3.5 points. Okay, so this should be moving now. We'll see how it goes. I'm just going to move my stop. I'm just going to trade it 1.5 and then cancel it. And then take it off, none. Move it back down to break even. So I just want it here at break even. If it goes, it will go. Do you see what I mean, yeah? But I'm safe now in this trade, and I've got good upside potential. So if I do that, move it up to my take profit. Now, where's the first place that it could stall? Here's where it could stall. Yeah, so here's where I want to have my take profit, because look at this. Do you guys see what pattern that is? Yeah, exactly. It's what you guys want to be doing constantly. Yeah. So look, drop, base, drop. So when it comes up to here, I could have trouble getting through here. So for me, I would rather bank it here. Now I'm not doing it upon what it's going to gain. I'm not looking at this and thinking like, wow, 50 pips. Yeah, we're going to make X amount off it, whatever, 47. So that doesn't matter. This is just based upon what market is showing me. Yeah, that's all it is. On the market showing me right now. So we'll see how it pans out. Yeah, you see that? Perfect, excellent. All right, so what else do we want to be looking at? So it's the same thing with all the charts, by the way. Same thing with all the charts. You know, euro dollar and pound dollar, Aussie dollar, they all move together anyway. So you know, with that being said, you know, you can do the same analysis. You probably find the same thing on these other charts as well. Yeah. So, do you guys have any questions on this so far? No? Okay, cool. So, um, let's let's remove all these. Let's again go off plane. Again, as much as you can, look at a plane chart as much as you can, because it will just make life easier for you. Yeah. Your tools to drawing are up here. You've got this toolbar here. Familiarise yourself with this. You've got your crosshair. It's good. You know, a lot of times I don't draw a trend line because I don't want to leave lines in there, but I'll get my crosshair and I'll draw like this, and I'll be like, okay, wow, there's a trend line up there. This is clearly an uptrend. Yeah, I'm recording the session. I'm recording it, so this one's going to go out. You guys will get this one. I don't know what happened to yesterday's sessions. That's why I wanted to do this again, because I wanted people to have access to this. So again, if I draw up here, euro dollar, pop. Remember, don't worry about it being exact. That's not important, yeah? I'll keep saying it, and I'll keep saying it, keep saying it. And the reason why I'll keep saying it, I'll give you candles that you want, is simply because it's the fact. You know, don't worry about being exact, yeah? So we've got a level up here. I can't help but draw these levels in, but that's not what I wanted to do. Sorry, my bad. What I wanted to do is I wanted to just do this. And just tell me what you see here. What do you guys see here, by the way? What do you guys see? Clearly, right? Market's coming down. As the market's coming up, market's coming down. So what's going on here? Is this not showing us some form of consolidation here? And what happens after consolidation? What do we get? We get a breakout. Why is it important to do this? Because you guys do this now. When you trade the London Open, the New York Open, the Tokyo Open, these sessions, you're trading a breakout consolidation. You guys don't see it so much, but because it's like this, a bit rangy. But it's what you're seeing, the small moves inside. At some point you want it to break and keep going. Yeah. As you know, it can go either way when it breaks, but you guys are going to get better at the breakouts as you get better at supply and demand as well, right? So that's why it's important to always do your practicing, do your homework. I mean, I don't really give you guys homework, but I do give you homework when I say to you, send me in what you've been doing, draw some levels and let me have a look at them, yeah? Okay, again, bam, draw our supply demand levels in, what we're expecting to see. Now this is the thing with supply and demand, really you want to be drawing like this, and then you'll notice that you'll get a lot more entries, right? If I show you this is how you're supposed to draw it, right? So I don't claim to be the one that knows all, etc. The reason why I draw it at the wicks is because I'm looking to reduce my risk, which means I'm happy to let it go if it doesn't go in my direction. But you know, this is down to you guys also to have a bit of discretion on this. If you want to draw it like this, you can draw it like this. Remember, there's no right and wrong. This is more of an art than science, yeah. And that's part of the issue of it. Sometimes is the fact that it is more of an art than science, but still, this is more of an art than science. So that's why there's no right or wrong way of doing it. Yeah. All I ask you guys to do is one simple thing: is be consistent. Yeah. So here's something I want to talk about. Let's cover this actually as we wrap up this session, which is important because this is to do with psychology, yeah? So I can show you all this, but you need to do it yourself. So what happens with psychology? Hello? Hey Roger. There's always someone crazy in here. Good to have you here. Right, so let's go into psychology. This is what people do, alright? So this is a typical example. So somebody gets a strategy, be it like the London Open, right? And so they trade it, and then day one. Right, so I'll do this for day. That's the one underneath it, by the way. So day one, okay? And they get good results. Bang! What they like, they're happy. So they've got this big smiley face. Day two, again, bang, they're happy. Day three, now they're more ecstatic, you know, when they've got that big smile. And they start thinking, wow, do you know what? I'm going to be a millionaire in no time. This can never go wrong, and so forth, and etc., etc., etc. And then they start doing things. They start changing things, right? So this happens a lot. And then they start changing things and deciding that actually they want to risk the whole account on it. You obviously never want to do that. Or they don't do that, but now they got this big smile again on day 4 and day 5 and so forth, and the week goes past and it's all great. And then, you know, let's say for 3 weeks, yeah, I'm just going to mute you guys. I'm getting some feedback. Have I done it? Yeah. Okay, cool, right? So 3 weeks. Here they are, and they're happy as Larry. Let's do it, smile. So this is why I trade the markets. I don't do painting and art and stuff like that. There you go, happy as Larry, got a big smile on their face, you know, and they're like, yeah, look at this, you know, I'm gonna be a millionaire in no time. This can't go wrong. Boom, 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 boom. And then after 3 weeks and the 4th week, they start having some, start taking some knocks in their account, right? And then now after 3 weeks, they have a losing day, right? So they're not feeling really upset or anything. They're just a bit like, okay, you know, it's a bit like that. Am I doing these expressions right? A bit like, you know, not really sad, but a bit like, oh, okay. They're not happy. They're not over the moon. They're not over the moon about it, but you know, okay, it's no big deal, right? Looks like a sheep closed up. Well, we'll say no more about that. I don't know what you're thinking there, mate. But right, okay, cool. So then what happens is on the next day, same thing happens the next day. So let's say that by day 4, they've had a string of losing days now. Yeah. So this strategy's been looking after them for 3 weeks, but now they're having the 4th week's not going well. On day 4 now they're not like this. This is not them. They're not like this, sitting there like, ooh, I'm a bit sad, right? Now they're angry, right? So now it's like, see if I can draw this for you guys. Now they're angry. Now they're like, it's a bit of an angry face. Yeah, I'm not a bad drawer actually. Yeah. So what do they do now? This is where they change psychologically. Something happens inside of them. Something changes now. So now they think that doesn't work. I'm going to stop doing it now. I'm going to change the strategy. I'm going to do something different. Or they start doing their analysis and looking into it and start deciphering and stuff like that and so forth. Now, I want you guys to write this down actually. There's 2 key rules I'm going to give you, okay? Now, rule number 1 is this. The market is always right, okay? Market is always right. Now, look, for some of you guys, listen, just hit me up. Who here is married? How many of you guys have a wife at home? Long-term girlfriend, etc. I know some of you do. Yeah. Well, people exactly. Always right. The market is like your wife, always right. Alright, so whether you've got a wife or you had a wife, one thing you know, the wife's always right. You can't win the argument. It's just the way it is. You know, it's not worth the hassle, right? It's not worth the hassle to try and win the argument with the missus. You guys know this, right? So, same with the market. You can't win the argument with the market. The market's always right, okay? Rule number two. So what does that mean? The market's always right. It means that you do what the market gives you, what it shows you. Yeah. So if, for example, you're trading a strategy and it's working for you, and then all of a sudden you have a few losing days, what do? You don't stop doing it. You carry on doing it. That's the mark of a trader. That's what it's all about, right? You keep going. That's why some people make money and some people don't. The people that make money are the ones that keep going. The ones that don't are the ones that keep changing things. Because let's say, for example, you did something different and you still made money. It doesn't make you right in what you did. It still makes you wrong. So it's important to understand that because it still makes you wrong, you still end up being in a situation whereby it's not repeatable. It's got to be repeatable, yeah. And I don't want you guys to have to come in and decipher everything yourself constantly all the time and have to know what's going on to make money. I want you to be able to come in and just do something continuously. That's how you make money. If you can just do the same thing continuously all the time without having to give too much thought to what does this mean, what does that mean, and you just go through the process, it becomes easier for you. And the more you do it, the more you stick with it, the more you embed that skill, and the better you become at it. You look at someone like Beckham, or David Beckham. I don't know what you guys think of him, but the fact is, his free kicks, he practiced and practiced and practiced that. Now he does that like it's second nature. I was watching this thing about Mike Tyson as well. Mike Tyson was my favourite boxer growing up, right? And he was showing how Customato used to train him, and he used to have numbers for the different punches. Now, typical traditional boxing, you got like 1 is a jab, 2 is a straight right, 3 is a hook kind of thing. Well, he had different combinations for that, and he used to call out the numbers. Now, when you look at it, there's 8 numbers for the punches, and Tyson could reel off any one of them, whatever they were. This is because he's been doing it for so long in that fashion. Do you understand me? Like anything, right? If you keep changing it, trying to find that secret ingredient, it isn't going to work. So just stick with it. It's like a chef says to you. Patrick's asking a question here. Well, yes. Number one, they have been back tested completely, so they're proven that they make money anyway. And number two, where Patrick's saying, Patrick's question is like, so basically we should just stick to the process and have faith. Yeah, the reason why I stick to the process and have faith, as well as that, Patrick, and everybody else, is that the markets move because of the imbalance of supply and demand. This is what it's about. This is any market you go to, no matter what it is. If you're buying coffee, the reason why, you see so many coffee shops popping up, right? So the other day when I took my son to school in the morning, because of where he goes to school, it's quite far. So for me to get into the city, I could take a train, but I prefer to take a bus. If I take a bus, I can take a bus into Brixton. From there, I can get a tube or a bus 133. I've got so many options, right? Whereas if I go from where he goes to school almost in the sticks, if you like. It's like they've got train stations, no tube there and stuff like that. So I like to travel into central London, right? So I can get a bus straight to Brixton from there, and that could be the best options. So that's typically what I would do, right? So anyway, the point is what happens when I get. What was my point going to be? There's a point to this. Coffee shops, yes, thank you. Right, so the point is, by the time I get into Brixton, I'm dying for a coffee right now. Or I can't wait to have a coffee. And I'm thinking, like, I could really do with a coffee because I've been travelling with this kid on the bus, right? So for an hour, right, and then I got to travel back for an hour. So I think, I could do a coffee at that point. As soon as I get into Brixton, there's a ton of coffee shops everywhere. Like, and you guys have seen this yourself, right? There's got Costa Coffee. On the other side of the road, you've got Costa Coffee. You look across the road, yeah, right, and you see Pret. Next to Pret is Starbucks. So you got 3 major coffee shops there, right next to each other. It's like, why would you do that? But of course, there's such a huge demand, isn't there? Right? So anyone that's got an office job, for example, drinks coffee, even if they didn't drink coffee before. So the demand is so huge. So when you've got this demand, what happens? Shops start popping up everywhere, right? These coffee shops. It's the same kind of thing. No matter what, it is knife, mobile phones. Jesus, why is it? Look, West End is another perfect example. You know, you got some nice coffee shops in West End, then you got all the Costas and the Pret and all the. I'm not saying they're not nice, also, but compare those to some of the nicer ones that you've got. Like, I can't remember what it's called now, but when I had an office in West End and the coffee shop downstairs, what's it called? They used to do really nice coffee. Anyway, it will come to me when I'm not in the room with you guys, and I'll remember it then. And anyway, so the point is, it's like, why are these other coffee shops popping up? Because demand is huge. Yeah, mobile phone shops everywhere you go. There's mobile phone shops everywhere. It's like, my God, what are all these phone shops popping up next door to each other? Right, they're next door to each other. You can walk out of EE straight into Vodafone, from Vodafone straight into O2 and so forth, right? Because of demand. So these markets moving because of supply and demand. We're trading supply and demand. We're doing the exact same thing. Yeah. So it's all about demand and supply on anything. Yeah. Okay. Cool. So the market is always right. What's this thing doing here? Oops. The market's always right. And rule number 2 is always or never forget. Always remember rule number 1. Yeah. Remember rule 1. Yeah. Cool. So the market's always right. Rule number 1. Number 2, always remember rule number 1. Never forget rule number 1. The market's always right. So you can never be right against the market, right? So knowing that means that you can let go of the need to be right, or you should let go of the need to be right. And I find that a lot of people can't do this. Yeah, I'm not speaking specifically to anybody in this room. This is just in general. That's what happens. Yeah. All right. Cool. Got stopped out on that trade. I'll look for another entry on that. Still running Aussie dollar down, so we'll see what happens there. Aussie dollar could be good. But 1 second, let me just have a look here. See if I think I have a setting up here on Aussie dollar. So I'm gonna look to get into Aussie dollar on the sell. There you go. And draw these in before we shut off the room, and then I'll look to see what I'm doing. If I take a trade, I'll post it for you guys. Yeah. So I'll have a look and then I'll post it for you guys to see which level I'm looking to take. Yeah. Before we wrap up here, but again, isn't it good to do this? Dollar Swiss has been triggered finally. Took a bit. Oh no, that isn't. That's the dollar Swiss. That's the one that I put in here. Remember that? Drove in, collected it, bang, just sold dollar Swiss. 12 pip stop loss is. Sorry. Look at that. Rod is on point. Excellent. Perfect. Okay, cool. So, any questions? Anyone? Can you guys hear this? So Roger just said, "Oh, you guys can hear this." All right, okay, that's it. Not friends with you guys no more. So I'm getting abused here about my drawing skills. You know, I mean, if you guys seen Picasso, right? And Picasso's world renowned, and seen his drawings. No, I thought I was. That's right, yeah. That's what I'm gonna do. These YouTube videos, these live rooms will be worth a lot of money when I'm gone, because of my art, my drawing, etc. All right, cool. So look, we'll wrap up there. Thanks for being here, guys. So I'm gonna post this pretty shortly, and then you guys will be able to watch it as well, and I'll post it in the group for you. Yeah. All right. Cheers. Thanks, guys. We'll sign out now. Thanks a lot. Bye now. Bye. Bye.